I want to bring in Mike McKee, who's going to be talking a little bit more about this. How do you think the Fed's plans are going to be received by Wall Street?
They're probably not going to be received all that badly, because the important thing here is that the Fed is not talking about capping pay. They're talking about regulating how it's awarded. Under their prudential supervision authority over banks, the Fed wants to make sure that bankers aren't paid for taking excessive risks. Now, they'll have to work out what that means, but if they can come up with packages that don't incent risk-taking that threatens the bank, that threatens to bring the government back in to rescue them, then they can probably make as much money as they want. The administration's on record as saying they don't really want to limit how much you can make, but how you make it.
Doesn't the Fed invite itself to be under greater scrutiny if this happens, though?
Well, it's all part of this regulatory reform that's going forward. Now, one of the things that's happening is while that has stalled, the individual agencies are moving ahead with their own plans. We heard from Sheila Bair about some of the things today that the FDIC wants to do, and the Fed is not sitting still. They have their own consumer protection plans, even though the administration wants to take those away. And they also have plans to deal with this compensation. It's something they've been talking about for a long time, and now as this crisis is ramped up, they're going to go ahead and do it.
But here's the issue. You've got exotic trading vehicles that regulators never heard of. I'm told we're now going to look at exotic pay packages that might be a little too complicated for regulators to figure out.
Well, the question will always be, how do you figure out what's in these things and whether or not they are too risky? But the Fed is likely to take the view in that case that if we can't figure it out, you're not going to be allowed to do it. And that's one of the things that's in the Obama plan, is whether or not a prudential regulator is going to be able to step in and ban new products from being offered if they're too risky.
More transparency as well, is what you're saying.
More transparency. And again, it gets back to the idea of limiting risk rather than limiting pay.
You are going to see some people maybe move over to the private sector, though, just to avoid the whole spotlight?
It's always a question, but there are a whole lot of people on Wall Street, and there aren't that many jobs in the private sector that they can go to. We've seen reports that the number of people who have left these banks over the past year is way down in comparison to what happened before. Now, obviously, opportunities are way down as well, but it's expected to be that way for quite a while on Wall Street, and by that I mean the broader Wall Street, the hedge fund world, etc. The question you have, the gamble for the Fed and the administration is how many people will actually move. They're betting not that many.
Now, I want to ask you about the G20 coming up. Global pay is going to be on the agenda. Sarkozy has been very harsh on executive pay. He has Obama's ear. What are Wall Street executives worried about?
Well, the G20 is going to be talking about this. It is on the agenda. However, there's not going to be an agreement on it in Pittsburgh when they meet. The European Union is in agreement. They are all agreed they're going to impose EU-wide limits or regulations, put it that way, on executive pay. Not sure whether they're going to actually cap it. But the British and the Americans don't think that's workable for many of the reasons that Sue brought up. You have a lot of exotic packages, and things are designed different ways in different countries. You have different tax regimes. You have banks that work in all these different countries. So they don't think it's workable. They'll talk about it, but probably not come up with any kind of specific agreement other than we shouldn't pay people for risks.
How likely do you think it is the Fed's plan is going to be adopted?
Well, the Fed's going to go ahead unless it's told not to. So
and I'm
at this
hearing
point,
the same thing. It's inevitable.
That's what's going to happen.
Will there be exceptions for exceptional performance? I think that's going to be a key issue as well.
Now, they're going to have to work out the exact rules and regulations of how this is implemented. But the fact that it's going to happen, given the powers they have right now, the Fed's going to go ahead.
And Wall Street's going to have to get creative about sort of getting around some of the Fed's regulations, which will probably likely happen.
Sue brought that up. Yeah. They're very creative on Wall Street. We've already seen new kinds of securitization come back, even though the securitization markets are suffering, and they will come up with new pay packages.
And the reality is the Fed is now a major shareholder in many, many banks.
Yes, they certainly have an interest there. Thanks, guys, for wrapping that up.